just talked about the equity markets, and we had kind of like a 30,000 foot view of it, and we looked at what happened in March and what's going on now. Let's look at the gold and silver market, okay? And let's talk about gold and silver because, I mean, historically, gold and silver have always been inversely correlated to the stock market. And what I mean by inversely correlated is that usually when the stock market goes up big, right, gold and silver comes down, or precious metal prices come down. When the stock market comes down significantly, usually gold prices go up significantly and silver follows, okay? And I'll get into that and in terms of how they do it. If you've been trading and you're experienced and you understand markets, you know, however you understand them, because there's different ways to understand them, you'll know that there are times when the stock market goes up and gold and silver prices go up. And there are times when the stock market comes down and gold and silver prices come down. So I want to dissect that a little bit because within that time frame, there's a portal, it'll tell you what's about to happen. And I think it's important to understand that. So here's how I'll explain this. Usually, when the stock market goes up and it's in a bull market or it's in a bull trend, like you had a 13-year bull run, gold prices should come down. And that's exactly what happened. You can see that after gold created a record high in 2011, it ran up from 2008 to 2011, about 300% or higher, right? That's what gold went from $685 an ounce to $1,921 an ounce from October 2008 to September 2011. Then, as the stock market started going higher and higher and higher, naturally on a mathematically based massive bull market, fed by a Federal Reserve that loves to print money, okay, gold suddenly started coming down significantly. So gold came down from $1,921 to a little over $1,000, actually about $1,030, $1,050, right? So a big drop. That's normal because that's how markets are. Markets are cyclical. They'll have their bull cycle. Then if you don't get out, that's your own problem. Okay, that's why we help you by letting you know and giving you the education to identify when a market tops out and how to get out of it, when a market bottoms out and how to get into it, right? But then gold came down and the stock market kept going higher. Normal, inversely correlated relationship. Equities go higher because it's more speculative. Precious metals like gold come down because the safe haven requirement is not there, right? Now here's what's interesting. If you go back and watch one of our videos from late 2019 or mid to late 2019, you'll notice we started talking about gold again. And we were saying, hey, we're seeing something that's weird, that's abnormal. Now, in life, sometimes weird and abnormal might scare people. But in the markets, weird, abnormal are good signals. They actually tell you that something's about to happen. And I'll tell you what we saw. As the stock market was creating new record highs in 2019, the gold market was breaking through resistance and creating new monthly highs or new quarterly highs. Not record highs, but it was coming out, it was showing us that it was done with the bear market of dropping, and now it's ready for a massive run. Strange. That's what I call the canary in the mine principle. And what I mean by that, if gold goes up, when the stock market creates new record highs, that is the sign that a few months later or a few quarters later, I mean, I'm not someone here who predicts exactly when something's going to happen. I can never do that, right? If you want that, you need to figure out somebody else to talk to. But what I mean by this is, when I noticed that, then we knew that sometime down the road, the stock market's going to drop big. And guess what happened? In March of 2020, after gold had gone up quite a bit, about maybe 20% or so, which was weird, gold was going higher when the stock market was creating record highs, the market drops 10,000 points. 10,000 points. Canary in the mine. Canary in the mine. Okay, so always pay attention to gold going higher, and usually it'll happen during the last phase of a bull market in the stock market. Okay, now some people ask me, hey Mukarram, when gold's going higher, how come silver didn't go higher? I was like, a very good question, but that's also normal. Silver usually is never the front runner in the precious metals market. Gold is the front runner. It's the leader of the complex, and it'll start going higher. Silver will follow, And just like in 2008, I traded silver in 2008 as well. In 2008, silver was trading between 16 and 19, 16 and 19, 16 and 19, frustrating range for most people. But the moment it closed over $20 on a Friday afternoon, sometime in 2008, silver just blasted higher. Guess what? Same thing just happened. Just about a week and a half ago, for the last whole year, silver was between 16 and 19, 16 and 19, coming down to 14, going back to 19, coming down to 12, going back to 19. But then, last week, on a Friday afternoon, closed over $20 and blasted to 26 within 3 days. That's the sign that silver could have a massive move up. So this is very important, guys, okay? Some things that have happened. Number one, the stock market is no longer, in my opinion, in a bull market. It has come down, shown you how strong that drop can be, and is now bouncing higher, right? But it's nowhere close to being a new bull market, okay? I wouldn't call it that. The gold market is definitely in a bull market. Why? Because gold has gone up as the stock market was going up in the middle of 2019. Then gold just blasted through resistance. 1380, 1400 was a resistance. It just went through like a hot knife through butter through that, right? Then at 1680, 1700 was a resistance. Went through that after it came back a couple times. And now, just a few weeks ago, created a new record high, over $1,921. It's gone over $2,000. Now, a lot of people asking me, well, Mukarram, is gold too expensive? Okay, that's the word I want to say. Is it too expensive to get into? Is silver also, because it's gone from 20 to 26 so fast, is it too expensive to get into? So I really want to dissect this way of thinking so that you can change and become very powerful in your way when it comes to managing your money, okay? Number one, there is no such thing in the market as expensive. Never. Why? Because a market never cares about a numerical price. It's only human beings like us, we care about the numerical price because we have an emotional reaction to a numerical price. So if gold is at $3,000, we think, oh my God, that's expensive. If gold's at $200, we think, oh, that's cheap. Because gold hasn't been at $200 since like when I first got into the business in 2005. You know what I mean? The other thing is as we grow up in our life, in our societies, in our schools, our parents, our life, we've been taught to think of expensive and cheap, expensive and cheap. Markets don't care about that. Why? Because markets are limitless. When something is limitless, it doesn't have an attachment to numerical price. But when you don't have limitless funds, you have an attachment to numerical price. That's why our teachers, our parents, our mentors, all of us taught us limits or expensive and cheap. So I always try to change that philosophy when we look at markets, and hopefully we're making that effort. We'll keep doing video sessions, lessons, whatever it is necessary to help people change that, because when you change that mentality, you unshackle yourself. And then there's a beautiful world out there for you to experience and to grow and to help and everything, okay? But getting back to the gold and silver, here's an important thing that I want to mention to you. People ask me, is the price of gold too high? Again, a variation of expensive. Is the price of silver, has it gone up too much, too fast? Variation of expensive, right? Here's how I dissect this, and it may make sense to you, it may not. If you have more questions, you can always reach out to me. First, when we look at why gold and silver move, there is a general reason they move higher because they have an inverse correlation to the stock market. So if the stock market goes down, gold and silver will go up like they did in 2008. Then what I do is I go back and look at what were the reasons that caused the stock market to drop, or let's say an economy to crash, whether it's in the United States, in Europe, or in some major economy like China or India or something, right? When we look at the 2007-2008 crash, there were two major things that happened that caused gold to go up. Number one is there was a subprime mortgage crisis. I know, People should never be buying 3 houses when they can't afford it, okay? But they did it. I know friends who bought houses and the bank couldn't prove that they owned it because the bank had sold their mortgage 3-4 times, okay? That's the weird paper world that we live in. But that's what happened. So subprime mortgage crisis unfolded. And then from there, you had the stock market crash because there were bankruptcies and there was debt and there were IOUs and so many things that happened, right? Okay, but there were 2 reasons, pretty much 2 reasons. Subprime mortgage crisis and the stock market crashing. Gold went to a record high, 300+%. Silver went up 400+%. It went from $8.50 an ounce, $8.50 an ounce to $49.50, almost $50, okay, from 2008 to 2011. This time around, people, please pay attention to this. This time around, look at the triggers. Number 1, before coronavirus, forget coronavirus, last year, US-China trade war, trade tensions. Then going into a year where you're going to have presidential elections with a very, however you feel like, whether you like Trump, whether you don't like Trump, I mean, I don't get into that, right? But with a very polarized United States. But here's the important thing. So US-China trade tensions. Then you have this presidential election, major, massive event coming up, this year. Then you had the unfolding of the disaster, the coronavirus disaster. Started in China, and then kind of like spread across the world and across the pond, came to the United States. I was actually in London in January when things were going on, and we didn't really notice that it was coronavirus. We didn't really think it was coronavirus. And then when I came back, suddenly everything happened, okay? Very, very interesting time. And, hopefully in later sessions I can, talk about that. But here's the interesting thing. Coronavirus is very different to anything else that has happened in the near-term history in the United States. Because what coronavirus did was literally shut down the US economy. Literally shut down how we live our lives in the United States. And I want you to understand why that's so important. Because the United States is a consumer-driven society. In 2008, when the market was crashing, I could still go to the restaurants. I could still go spend money. I could still buy things on my credit card and go out and spend money. Today, I live in California. In Orange County, California, you go outside, you hardly see anybody. I talk to friends from Florida, from New York. I talk to clients across the country. Everyone's telling me the same thing. This is what I call street sense. If you have street sense, you'll know that this time around, in a country that was built around consumer spending, consumer-driven economy, and a debt-driven economy, by the way, which I don't like, but that's what it is. It's a debt-driven economy. We can't spend money. And if you can't spend money, then it's going to affect this country in time, right? It's going to affect the economy. That's why I call it a post-COVID economy. How would that look like? Warren Buffett gave a very interesting, I would say a window into it, right? Because like a month ago or 2 months ago, I don't exactly remember when he had his conference, he said he was getting out of all airline stocks. I know airline stocks have come back up, but why is Warren Buffett getting out of all airline stocks? Because he thinks that traveling has changed forever. Today, I had a couple of friends of mine fly out from the United States, and for a week, it was difficult for them to schedule their testing and then get on a plane. They had to cancel the flight, get back on because they needed to test for 48 hours. And then inside the plane, each seat is empty because that's how it is. Strange world. We've never lived in that world before, especially in the United States. Maybe in some other, third world economies and things like that, you can go through that, but not here. So this is a massive, massive fundamental factor that doesn't just happen and go away. It's not like an election. It's not like a war or a bomb or some kind of activity, something happened. No, it's something that's consistent. The next thing that I want you to focus on is if you look at all this, it's like a perfect storm of events, fundamental events. So when people ask me, how high can gold go? Please understand the markets are limitless, okay? There are estimates out there of $3,000 gold, $5,000 gold, all those numbers. I'm not sitting here and telling you a number. But what I want you to understand is if gold went up 300+% from 2008 to 2011, silver went up 400+% in 2008 to 2011, imagine where it could go with all of this perfect storm of events unfolding. That's why you're seeing gold at a record high. That's why you see silver blasting in the 20s, right? There's a lot of room because silver's record high is close to 50. So there's a lot of room. So there's a lot of opportunity, okay? So that's something that I wanted to make sure that people understood because there might be this confusion. When prices are high, I don't want to get into it. Well, in any healthy bull market, you'll see a market go up maybe 5 steps in a row, come down 2 steps, then go up another 5 steps. So it takes out its previous high, comes down, takes out its previous high, comes down, takes out its previous high, right? Just like a stair-step kind of way. And that's what we're seeing. So don't be afraid of numerical price. Don't worry about whether gold's at 2,000 right now or 2,500, silver's at $25 or $30 or $40. Don't worry about that. Look at the fundamentals and the mathematics of how high this market can go. Okay? And if you have any questions, please reach out to me on that. Thank you for spending your time with us and learning about the markets. Hopefully the information presented was beneficial to you. Please like and subscribe to our YouTube channel below and be sure to check out Bullionite.com for more actionable information that can help you attain your goals. Wishing you a happy and successful investing and trading.
Content is for educational purposes only. This is not investment advice from Bullionite LLC. There is always risk for substantial losses in investing and/or trading through any financial instrument with or without this or any other type of advertised product. Past performances are not indicative of future results. Different types of investments involve varying degrees of risk. Specific strategies or education presented by Bullionite LLC and its associates in this video are for educational purposes only.